Today is Monday. It is the 20th of August, 2012. And I'll start off within the silver quarterly chart, move on to the daily chart, but really focus on the lack thereof within the volatility within the summer. Well, currently on the quarterly chart, which started in the month of July, which means we're a little past the halfway point, there has been only 7.5% movements within this current green candle. It's always over 20% and usually in the 30% area for 3 months movements, but not much has been coming into play. I don't talk too much about the strength, and really all this is how much it has retraced from bottom to top, which means after, or the Fibonacci level above the 61.8% is the 76.4. So at 77.3, that pretty much has been telling us that the first Fibonacci support level has been just that for, well, the last year and change. It has held thus far, but has still yet to make it above any of these highs. Let's move on to the daily chart, again focusing on the lack thereof the volatility. And here we are, not much going on, and the same pattern that I've been talking about is definitely in play. We have that of an ascending triangle, which means you have pretty much a straight resistance line, which is pretty evident, roughly around the 28.40 mark, 28.45, and an uptrend line, which has connected 2, 3, 4, 5 different points. The trend line will come, or the completion of this triangle is coming very closely, but still the same old information. It needs to have a clear break above this, and if it stays above this trend line, well, we're still in this pattern. The general average, and I think it's about 3.2%. I can quickly take a look at this now. Yeah, I just calculated. This is the median movement since 2007, 3.1%. And the average is 3.63%. And there haven't been too many major movements. In fact, this is a screenshot of the daily chart. Today's movement so far is a little over 1%. Friday's was 1.1. And you look at all of these numbers. In fact, since August the 6th, we have had just one single day with greater than 2% volatility, which was this day in here. And it lost 3 cents, so it pretty much stayed even for that particular day. This is by far the least volatile I have seen this silver market since I've been following it. So therefore, when you see these types of movements, I look at this as in the big moves, whether it be up or down on the next leg, to be taking place. However, figuring out how long this low volatility is going to last, it can take a while. It could be right after Labor Day. It could be October, November. Very difficult to gauge upon how long the duration of this is going to take place. But it's going to come back. It's not going to stay in the low volatile movements, especially when we see the given debt crisis that's coming. Finally, the debt crisis. I'm not going to talk too much about the Dow Jones or anything in this, but it's going to be in reference, as it will be later this year, that the debt ceiling will have to be talked about, and you'll have to do something about it. They, of course, being, we'll say, the powers that be. And last time that occurred, which was the summer of 2011, the stock market was actually taking some significant hits, and the gold and silver market were actually going higher. So that's something to keep your mind on as we move forward. And thank you for tuning in to today's video.